gentlemen, and welcome to the Twitter Q1 2016 earnings conference call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. I would now like to turn the call over to your host, Krista Bessinger, Senior Director, Investor Relations. Please go ahead.
Hi, everyone, and welcome to our Q1 earnings Periscope. We have with us today our CEO, Jack Dorsey, COO, Adam Bain, and CFO, Anthony Noto. We hope you had a chance to look at our shareholder letter, which we posted on our Investor Relations website shortly after the market close. Like last quarter, we'll begin with just a few prepared remarks before we open the call directly to your questions. During the Q&A, we'll take questions asked via Periscope and Twitter, in addition to questions from conference call participants. To submit a question via Twitter, please direct it to @TwitterIR using the hashtag TWTR. We'd also like to remind everyone that we'll be making forward-looking statements on this call, such as our outlook for Q2 and 2016 and our operational plans and strategies. Actual results could differ materially from those contemplated by our forward-looking statements, and reported results should not be considered as an indication of future performance. Please also take a look at our filings with the SEC for a discussion of the factors that could cause our results to differ materially. The forward-looking statements on this call are based on information available to us as of today's date, and we disclaim any obligation to update any forward-looking statements except as required by law. Also during this call, we will discuss certain non-GAAP financial measures. Reconciliations to the most directly comparable GAAP financial measures can be found in the tables in our shareholder letter. And these non-GAAP measures are not intended to be a substitute for our GAAP results. And finally, this call in its entirety is being broadcast over Periscope and being webcast from our Investor Relations website. And an audio replay of this call will also be available via Twitter and on our website in a few hours. And with that, I would like to turn it over to Jack.
Thanks, Krista. Hi, everyone, and thanks for joining us. A couple of things before we start with your questions. This is our first quarterly update after laying out our long-term strategy and priorities. And as we shared last quarter, our focus is on live. Twitter has always been the best place to see what's happening now. Whether it's breaking news, entertainment, sports, or everyday topics, only Twitter lets you connect with people anywhere in the world with live conversation. Think of President Obama congratulating Elon Musk on the historic SpaceX landing, or the world celebrating the legacy of the legendary artist Prince. Only Twitter lets you follow these historic moments, join in the conversation, and share it with others. We made a lot of progress on product innovation this quarter, particularly with live video and our refined timeline, and people love it, with less than 2% opting out. We remain focused on improving our service to make it fast, simple, and easy to use. We also announced a significant deal with the NFL a few weeks ago. As soon as we announced that deal, almost every league in the world contacted us because they want to provide an even better experience for their fans. And with that, we'll move on to your questions.
Great, thank you. Sabrina, we're ready to go ahead and take the first question, please.
Thank you. Ladies and gentlemen, if you have a question at this time, please press star, then 1 on your touch-tone telephone. If your question has been answered or you wish to remove yourself from the queue, please press the pound key.
Great, and it looks like the first question is from Anthony DiClemente at Nomura. Anthony, please go ahead.
Oh, thanks a lot for taking my questions. One for Anthony and one for Adam. I know you don't give forward guidance on users or the active user trajectory, Anthony, but can you just give us or speak to trends that you're seeing in terms of new users added, resurrected users, and retention? You know, I think last quarter you talked about users from performance-based marketing having higher retention rate, and obviously if you want to give us guidance on users for next quarter, I think we'll take it. And then another one for Adam, just in the shareholder letter, it talked about brand marketers not increasing spend as quickly in the first quarter. You know, I realize that monetization is still growing, but in terms of the deceleration, are dollars shifting back to traditional media platforms, do you think? Are they shifting to other major online platforms? I guess just in your conversations with brand marketers, how are they looking at the strengths or weaknesses of the Twitter platform versus other major media platforms that brand marketers might pursue? Thank you.
Thanks, Anthony. I'll take your first question. In terms of MAU growth, the primary drivers of MAU growth in the quarter were both seasonality and marketing initiatives. Of course, the continuous improvement in our product underlines the benefit and seasonality that we're seeing. It's just not large enough for us to break it out specifically, but as we talked about in the shareholder letter, there are contributions there. As it relates to the funnel dynamics, we benefited in the quarter from both an improvement in the top of the funnel as well as retention. And again, the retention improvements reflect a continuous improvement in the product, starting to impact the ability to retain a larger top of the funnel this quarter. In terms of our outlook for Q2, we're not providing a Q2 MAU outlook. In the past, when we have provided an MAU outlook, it's because we felt there were some unusual underlying trends that we need to point out, and that's not the case today.
And Anthony, I'll take your question around the advertising side. On the advertising side, overall, as we mentioned, brand spend didn't grow as quickly as we expected. In the quarter, video was strong. But that was partially offset by some softness that we saw in older legacy brand products. So these are promoted products, for example, without video. In terms of the opportunity ahead, we see a clear opportunity ahead to increase our share of the brand advertising market, especially around video. Some of these new video opportunities will, we believe, grow budgets that we have access to. We also hear from marketers that there's nothing in the world like Twitter in terms of as a marketing platform. Twitter is that live connection to culture for marketers, and that's both unique and special in the brand universe. Live is what's most valuable in the ad business. So to make this even more powerful, we're working on some video tools. These are things like reach and frequency planning, demographic targeting and verification, which will roll out this coming fall to coincide with our NFL deal and our live streaming strategy.
Thank you.
Great, thank you. And the next question comes from Doug Anmuth at J.P. Morgan.
Hi, thanks for taking the question. This is Corey Carpenter for Doug Anmuth. Maybe just a quick question on the NFL deal, which I know you guys discussed in the letter. Could you maybe just talk through how you thought about it from a user acquisition or engagement perspective, and then maybe also how you're thinking about it in terms of monetization? Thank you.
Sure, and thank you for the question. As Jack mentioned, Twitter has always been known for the place to go to see what's happening in the world right now. And we've been real time. And the reason we've been real time is because our tweets are publicly available for everyone to see, and they're broadly distributed. And live is the best manifestation of real time. We already have live connections, live conversations, and live commentary on the platform. And it's an opportunity for us to add live premium content to those conversations and that commentary. And so, yes, the NFL deal is important, and I'll talk about that in more detail, but we're focused on live premium content in all of sports, news and politics, as well as entertainment, to bring together for our users what they're already talking about, what they already care about. As it relates to the NFL, we know that on Thursday nights, during the 3-hour telecast of Thursday Night Football, we have millions of users looking at tweets about that game. And they're creating tens of millions of impressions that we know are very valuable to them and very valuable to our partners, both the NFL and, of course, our advertisers. And so being able to bring the live streaming game into the product with that live commentary, those live conversations, is a complete solution. And it's a complete solution for those tens of millions that are already on our platform and care about the NFL, and the tens of millions of NFL fans that are not on the platform. And so we see it as a product that will be the same for logged in, logged out, and syndicated users. It's the same video, the same ads, the same analytics. And we can deliver in an instant a very transparent way to tell people to come to Twitter and deliver on that instantly. We've talked about the importance of us clearly communicating our value and delivering on it instantly. Live sports, live premium content is a way to communicate something that's very familiar to people, something we know they want based on their interest on Twitter, and to deliver that in an instant, not just with that live video, but all the great conversation and tweets that are attached to it, and expose those that haven't used Twitter to that great content and those that are, a complete solution. So we're really excited about the opportunity to use it as a complete solution.
Yeah, on the advertising side, we control some of the inventory in the pregame, in the game, and also post-game. This follows along a multi-year, 3-year history that we've had with the NFL, bringing premium content onto the platform and also bringing it out to Madison Avenue.